Ladies and gentlemen, good day and welcome to the Associated Alcohol and Breweries Q1FY22 Earnings Conference Call hosted by Dolat Capital Markets Private Limited. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal the operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Himanshu Shah from Dolat Capital Markets Private Limited. Thank you and over to you, sir.
Thank you, Lizanne. On behalf of Dolat Capital, we would like to thank all the participants for taking time out this afternoon for call with Associated Alcohol. We would like to thank the management of Associated Alcohol for giving us the opportunity to host for Q1FY22. We have with us from the management Mr. Tushar Bhandari, Full-Time Director, and Mr. Sumit Jetli, Company Secretary. Thank you and over to you, Mr. Bhandari, for your opening comments.
Thank you, Himanshu. Good evening, everybody. It is a pleasure to welcome you to the earnings conference call for the first quarter of the financial year 2022. As you may already know, Associated Alcohol and Breweries Limited is one of the largest single-location distillery in India with a state-of-art integrated multi-grain-based manufacturing facility strategically located in central India near Indore, Madhya Pradesh. The company has an existing capacity of 45 million liters per annum and further plans to increase the capacity to 75 million liters per annum. It is engaged in the entire value chain for manufacturing and selling of ENA and contract manufacturing for Matthews brand, as well as direct to customer sale of their proprietary IMIL and IMFL brands and licensed brands. Now let me take you through the key financials and operational highlights for the Q1 FY22 of the company. The operating income of the quarter was around 30.3 crores, which was an increase of approximately 33% on a year-on-year basis, but down by around 37% on a quarter-on-quarter basis. Operating EBITDA reported was around 15.6 crores, with an increase of about 77.3% on a year-on-year basis and down by 35% quarter-on-quarter. Operating EBITDA margin stood at 19.43%. Net profit after tax reported was around 10.1 crore, which grew by 110.4% on a year-on-year basis and was down by 33% on a quarter-on-quarter basis. PAT margin were around 12.58%, which improved by 463 bps on a year-on-year basis and by 81 bps on a quarter-on-quarter basis. This has been a steady improvement in the financial performance of the company post the gradual resumption of the economic activities. I will now take you to quarterly segment performance. In the manufacturing segment, revenue for the Q1 were around 31 crore. Our merchant ENA sale volume for the quarter was 43 lakhs, which was up by 48% on a year-on-year basis. And the revenue from sale of ENA was 21.7 crore, which was up by 37% on a year-on-year basis. In the consumer segment, revenue for the quarter was 49.3 crore, which was an increase of 68% on a year-on-year basis. Our sales volume for IMIL were up around 80% on a year-on-year basis to around 6 lakh cases. The IMFL proprietary volume was up by 28% on a year-on-year basis to around 1.25 lakh cases. And IMFL licensed brand were up around 79% on a year-on-year basis to 1.16 lakh cases. During the quarter, the operating of business was impacted as the production was closed for almost 50 plus days due to lockdown in Q1 FY22 and closure of liquor shops. On the day when the retail shops were open, the business saw an above average momentum. MP and Kerala were under complete and strict lockdown in Q1FY22, thus affecting the sales in these states. Raw material price saw a slight increasing trend of approximately 10% and is expected to remain stable. Capacity utilization during the Q1FY22 was approximately 60%. Lastly, as the vaccination drive is in full swing, the outlook remains positive for Q2FY22, and the business is expected to return to normal levels. With that, we can now open the call for the Q&A session.
Thank you. Ladies and gentlemen, we will now begin with the question and answer session. Anyone wishing to ask a question may please press star and 1 on your touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is on the line of Keshav from Raxans Investors. Please go ahead.
Hi, good afternoon, sir. Hope you and your management is safe and healthy. And
Hi, Keshav.
Congratulations for a good quarter in a very, very difficult time, sir. Sir, I have a question that might be conjectural, but a very broad-based view. So, in FY23, Q1, Q2, around that time, we are coming up with more ENA capacities that will be fungible with ethanol. Now, the government has set a target of E20 fuel by 2023-25. There are a lot of new capacities being built and coming up to cater to this demand, both molasses and grain-based. But currently, the cars, the vehicles are compliant with E10, and we are roughly in the range of 8.5% blending. The auto industry is also pushing for first E10 and then gradual phase up to E20, and also has advocated for separate fuel dispensation and all. Now, with this backdrop, in a situation where ethanol supply is much more than that can be absorbed for blending, and these fungible capacities in the industries can maybe then trickle down to ENA and put some pricing pressure. So, sir, what do you foresee as challenges for us as a company, because the ethanol industry has sort of bypassed the natural capital cycle and is partaking in a state-sponsored demand? And if a situation like this were to happen, would we be able to increase our ENA absorption for value-added products appreciably over a period of, say, 2 to 3 years from now and build on a brand strength?
Okay. Hi, Keshav. I think it's a very well question which you have asked. For us as a company, we are a core alcohol manufacturing company. Okay. Ethanol is an opportunity which we have got in line the market. Our always long-term focus would be to increase our value-added products and increase the sale of our products, and in turn utilizing the ENA in that. But at present, there is a huge opportunity and there is a huge demand-supply gap on the consumption of ethanol. Like, for example, even MP has achieved that 8%, the standard 8% which is required. But out of that 8% which MP has achieved, still 50 to 60% of ethanol is coming from outside MP. So wherein MP companies, like if we manufacture ethanol right now, so we will get a better realization than the companies who are sending from outside MP. So this demand-supply gap, we are here to cater that demand-supply gap. And what we are also doing is that looking into the long-term we are also going in for dual mode of ethanol and ENA. So as per the requirement of the market, if we see there is an opportunity or better realization in ethanol, we will sell ethanol, which we see in the next coming 3 to 4 years at least minimum. There will be a added advantage in ethanol pricing. So we will go ahead for ethanol. But as per long term, you say that long term, see, after all the capacities will come, even government is by 2025 is expecting almost 20 to 25% blending of ethanol. So still there will be demand there. But there is a slight challenge which might come into place is that if most of the companies, like see sugar companies, are most of the sugar companies which were making ENA are moving towards ethanol. So this gives opportunities for us to increase the price also, because now the RS or ENA available which the sugar companies were providing earlier is slightly less. So it will give us a price advantage. Plus, what risk we see, that if most of the companies come up with a grain-based ethanol plant, then there is a strong possibility of the commodity price going high. And if the commodity price go on the upward trend, then we can surely pass on that commodity price high to the buyers of ENA, and in turn we can also pass it on in certain cases to our own value-added products also.
Absolutely, sir. So the best case scenario is very, very positive for sure. But sir, like the bottleneck ultimately can come from the compliance from maybe the auto industry, because right now all these vehicles are E10 compliant, right? So say we are coming up with
that right now there's so I'm saying right now still there is a huge shortfall, okay, in complying that 8% requirement of the government which was there earlier in terms of ethanol. So right now itself for next 2 to 3 years to comply with that 8% achievement is still there's a huge opportunity. And after 3 to 4 years, the automobile companies will also comply with it. So then again, there will be an opportunity there also.
Okay, sir, just to put one thing. So we come up with capacities next year, and say the first year is more of ENA, and then it gradually goes into our value-added products. So say, sir, 5 years down the line, with no more capacity additions in our business, what kind of profile do you foresee coming up from our ENA as a percentage and other value-added products?
See, our objective is primarily to sell whatever the value-added products is there and increase the sale of our products, and then whatever the remaining would be there, the ENA sale would happen out of that. So either ENA or ethanol, whichever the pricing, whichever will give us a better pricing realization, we will go ahead with that. But if you talk about the 5 years down the line, what is our view? Our view has always been, as I said earlier, also to increase the sale of value-added products. So when our capacity around 2 years back was around 35 million liters per annum, and we moved from 35 to 45, our objective was that the additional capacity which we are creating, we have to increase that amount of sales in our value-added products, and that we were able to achieve that. And now again, our view is that when we, like say 1 year down the line, our fresh capacity will come up, and within next 5 years, we should utilize the maximum amount of ENA which we produce in our own value-added products.
Okay, sure, sir. I'll join back the queue for follow-ups. Thanks a lot, sir. Thank you so much.
Thanks.
Thank you. The next question is on the line of Abhishek Maheshwari from Sky Ridge Wealth Management. Please go ahead.
Yeah, hi sir. Thank you for the opportunity. So a couple of questions.
Yeah.
So this 100 kiloliter per day ethanol facility that you're setting up, this is over and above our original expansion plans of 35 million, per annum capacity, or this is the same?
This is the same part of that only. So
okay.
Presently we've got a capacity of 45 million liters per annum. So from 45 we will move to 75 with this.
Okay, so this is a part of that only. It's not over and above that plan, right?
Yeah, it is part of it.
Okay, and sir, secondly, so obviously Kerala and Madhya Pradesh, Kerala constitutes the major portion of your sales, 45% or so. So I think we are still seeing the cases over there increasing at a much faster rate than other states. So any impact for Q2 also, or are we, normal now?
If you see year-on-year impact, there would not be much year-on-year impact. We are able to maintain the sale which we had achieved in Kerala last year. We are able to maintain that as on present, but our aim was to double our sales in Kerala, which is not being seen at present. Due to since last 2 to 3 months, there is a still heavy amount of cases coming in Kerala. A lot of bars have not opened. Few shops are closed in certain regions wherever there is a high number of cases. So we are able to till now maintain our year month-on-month performance, but that additional sale is not coming. That is the only thing. So
okay.
But in Kerala also what we've done is that now on we've launched our premium brands. So we are expecting a better margin to come up in Kerala from this year onwards.
Okay, yeah, we can see the margin improvement definitely. So, sir, month on month, so basically what you're saying is July, August, you have maintained the sales performance in Kerala, but we are not seeing much of an increment there as of this
Yeah.
moment.
Yeah,
So,
yeah, yeah.
okay, sir, thank you very much and all the best. We'll get back to the queue.
Thank you.
Thank you. The next question is on the line of Piyush Chadda, an investor. Please go ahead.
Thanks for the opportunity. Just wanted to understand a little bit more about your margin structure. I think the realization for ENA, if you add the byproducts that you generate when you manufacture ENA, would be around about 60 to 65 rupees a litre, 60 to 63 rupees a litre, somewhere over there.
Yeah, ENA realization is, if I just say pure ENA realization is somewhere to the tune of around 52 to 53 rupees at present. 52 to 55 rupees.
And would we generate around about 8 to 10 rupees of byproduct for every litre of ENA we make?
Yeah.
So around 60 rupees. So broadly speaking, would you earn around a 10 rupee margin out of the 60 rupees over there, 10 to 11 rupees?
In ENA sale is around about, say, around anywhere between, as on today, 12 to 15% of margin contribution.
12 to 15%. This includes the sale of byproducts, or it doesn't include that?
No, it doesn't include.
So if we add byproducts, then it's closer to 20.
Yeah. Byproduct is calculated in the cost only. It comes in the part of the cost, right? Including byproducts and everything I'm talking about.
So would 15% be including byproducts or not including them?
Yeah, including.
Okay, so that is your margin. How does that change when you move into your own value-added products, or either the IML or the IMFL and subcontracted manufacturing? Because our gross margin is also around, our operating margins rather still around 15% only.
Pardon me?
How does this margin picture change when you move towards IMFL and IML that you make?
So IML is around 15 to 18%, and IMFL is around about 20 to 23, 24%.
Are we actually realizing profits on these? Because we are a relatively young company in the sense that are we in the build-out stage, or have these product lines started becoming profitable?
Because of the premium products, they are becoming profitable.
Okay. Then, going forward, when should we sort of assume that the overall corporate profitability starts trending towards, that 18% kind of a range which we should head towards?
It will still take time because, we are entering into other states, and entering into other states is a big challenge.
Okay.
If I need to grow volumes, at Madhya Pradesh, I'm standing almost around 25 to 30% market share. So today, whatever I will grow is as per the market movement, and slightly I'm able to capture others' market also. But if I have to grow exponentially, I have to enter into other states. So when you enter into other states, there are certain things we keep in mind. One is that we do not involve a lot of capital expenditure. So basically, we go on an asset-light model. We try and tie up with a local bottler there, and then we sell from there. And plus, apart from that, the working capital which is required, major portion of it is ENA. So ENA we supply from our unit in those areas. And we make sure that whatever realization in new market we enter, at least we are not making losses, and at least whatever profit I would be making in selling the ENA, that much I have to assure before entering into any other market. And when I enter a market, I enter with a lower end product because that gives me volumes, and it helps me to sustain my fixed cost, whichever is there. And then slowly we start introducing our premium brands. So the similar kind of thing we did in Delhi, similar kind of thing we are doing in Kerala. So Kerala, when our sales started going up, we started introducing our premium brands. And this year we've lined up at least 3 premium brands in Kerala market. So that will give me a margin expansion. That is the model which we are following.
And, today, if I was to look at it, around 1/4 of our, rather slightly more than that, maybe around about 28, 29% of the ENA is sold as commodity. The rest is either used for our own products or used for subcontracted manufacturing?
Yeah.
Will that number stay more or less constant in the sense that, when we bring in additional capacities towards next year, will we have enough volumes in the other production buckets to make sure that, this proportion stays more or less constant?
Well, the proportion, see, at present, if I tell you my proportion of my top line is around, say, more or less 33% of my top line is ENA, 33% of my is IML, and 33% is around 30% is IMFL. We expect the IMFL business to grow, but as you said, that when the capacity expansion come in, that time what we are trying to do is, by the time my capacity expansion come in, whatever quantity I am selling ENA right now, I will try and assure that quantity of ENA I am able to convert into my value-added products. So that's our focus at present.
I see. Pretty much done. Just one last question, if I may. You take a lot of pride in the fact that you're one of the largest single location distilleries in Asia. Why is this so important to you? It's not something I could understand.
Now the things have changed completely. It is of importance because there are two major things in that. Because earlier what happened is, in the molasses-based era when we were functioning, so one could not grow at one particular location to a greater extent because of the effluent treatment issues which were there. But now post are getting into the grain manufacturing, that all been taken care of. So if you grow obviously more in one particular location, it gives you economies of scale. So for example, if I'm doubling my capacity here only, so with the same amount of staff and overheads, I'll be able to double my capacity. That will add to greater amount to my margins. So that gives a lot of importance. And apart from that, we have a huge locational advantage. We are almost at the heart of India. So we are equidistant from across the country. So we can supply anywhere at the same amount of transportation cost. And in India, there's major amount of ENA manufacturing facility are located in the north, and major consuming states are the south. So today I have the added advantage of transport as compared to the factories which are there in the north.
I see, sir. I see. Thank you very much. Deeply appreciate this. I'll get back in queue.
Thank you.
Thank you. The next question is in the line of Dhruv Kashyap, an investor. Please go ahead.
Yeah, good afternoon, Tushar. And firstly, thank you so much to you and your team that's been working sort of tirelessly and with great results at it over the last 1.5 years of these COVID times. So thank you so much for that. My first question, Tushar, is that as a sort of company or a consumer marketing company, these are the times where there is a lot of talk, buzz, and emphasis on mass. Whereas we always keep talking about premiumization, but also the landscape is affording that opportunity where ever since USL was bought over by Diageo, and Diageo seems to be focusing a lot more on its international proprietary brands, they are vacating a lot of the absolute mass segments where we would like to build our brands in, both in India and abroad. Now, in my network, whoever I have spoken to in countries of Africa, where there is a lot of inherent demand for Indian whiskies because of maybe their Indian people there or they've been consuming these whiskies, I am told that segment's completely vacated by USL and is now being taken completely by Radico. So do we have any such plans to get into places where there's a strong demand for Indian alcohol and is not being supplied by the largest player anymore?
Dhruv, I absolutely take your point, and we've been also of that thought process only. So basically for premiumization, see, there are two kind of premiumization definition. See, from where we have come from. Earlier we had a brand which was only, I'm talking about 5-6 years back, where we had only one single brand which was doing fairly well, and it was just above the IML category. Okay, so from that brand we have moved now to popular segment. So industry is divided into IML, cheap brands, popular, prestige, and premium. So we are also focusing on that segment only, which has been vacated by USL. So we are concentrating on the popular brand category, so which gives us a better margin realization. But in that popular brand category also, we are also looking into premiumization, slightly more premium brands also there. So as you rightly said that there have been across the markets, it's been vacant. It's not only in the international market. So for example, it's been vacant in the CSD market, in paramilitary market. Earlier we never used to do business in paramilitary market. But now at least we are doing at least 35 to 40,000 cases in paramilitary market. And the brand is being accepted really well there. Then export market also, we are aggressively looking at export market, and we are doing our export business in African countries. As you pointed out, we are doing export business also. So in that, our lower end and the medium end and the premium and popular brands are going there. So we are definitely looking into those markets and trying to capture those markets. But what we are trying to do there in that market is that we are trying to give value for money to the customers. So we are, for example, our titanium vodka is there, which is almost quality-wise almost equivalent to any premium vodka which is available in the market. But we are giving at a slightly, say, 40% discount than those premium products. So that is because that is attracting value in the market. So that's what we are looking at. And plus,
so Tushar, this is a follow-up to that.
Yeah, sorry.
Sorry, please go ahead.
So apart from that, we are also there are other pockets also available in the market which we are targeting on. That is a super premium product range. So super premium product range is like, for example, right now you have to go with the trend also in the market. So for example, right now the trend is people are buying super premium gins. Okay, so we are in the stage of manufacturing, getting consolidated and manufacturing that also. Because there are certain unorganized players also who have come up with craft gins and all, and they are doing good business, and they are also charging good amount of pricing. So that will also give us a margin. So in future, if we have to look at a company, so we have to have an entire bouquet of the products with us. Because tomorrow if I go to a customer, or for example an international customer, I need to have a bouquet of at least 7 to 8 products, which ranges from lower end to popular end to a premium end also. So that that particular customer of mine does not go anywhere for any other product. So that has been our focus now.
So Tushar, just as a follow-up to that, so if we break this into geographical, there's a tremendous low-hanging fruit opportunity in international markets which are D&E, similar to India kind of markets, and there's been a bit of a historical presence of Indian brands which are being vacated now. And similarly within India, I was told last time you had entered UP and you were trying to get consultants, etc. to help you. I'm sure you must have mapped out that which are those big 80-20 kind of markets in India and abroad which you can get quick wins in as low-hanging fruits.
See, we have done that, but there have been a couple of things which has happened. As you're aware that last 1.5 years has been tough for everybody. So for exports also, especially in African market, it was very difficult for containers to go to and fro, and there was no container availability. So that was the case, but we are aggressively concentrating on the African market, and plus we are also looking into the US markets also, because US markets are also have got good demand, and the Gulf countries, these are the countries which we are looking into it. And plus, if you talk about say India, so India we have already entered UP. So last year we entered with our low-end product, and this year we have introduced our premium product, popular end product, which is a Central Province whiskey. And plus, apart from that, we are looking markets like Pondicherry, Odisha also to get into.
Okay. And Tushar, my last question is, if you can just give some color or understanding, because I know you share it in your presentation and I know you share it in your conference call, but I just want to understand it in a bit of detail, and that's why if you could shed some color on it, that if I've understood correctly, there is a ENA business of yours. On top of that, there is, let's say, contract manufacturing, which could be for IMFL. And on top of that, you have your own proprietary brands, IMIL and IMFL, and I'm assuming that's how the margin moves also, right? So the ENA would be least, contract would be in between, and your own brand would be the top.
No, so basically what is there is that ENA is there. Sorry. The product portfolio is like ENA is there. Then we've got IMIL business, which is country liquor business. Then we have got IMFL business. So IMFL business is also divided into two portions. One is the franchisee business of USL brands that we are doing for Madhya Pradesh. So the popular brands which we bought of theirs which we bought, and then there is IMFL of our own brands, and then the fifth product line is the pure job work business. So that is manufacturing, pure job work business, manufacturing for USL brands. So which includes all their scotches like Black and White, White 69, and Black Dog, and all their other product portfolio which we manufacture for them. So this is how.
Sure. So if I was to take that as the, so if I was to take that as the current in your 4.5 million liters capacity, I am assuming that your own IMFL will give you the most margin, and your ENA will give you the least margin.
Yeah.
Is that a fair assumption?
Yeah.
Right. So if that's how it stands, so like you explained, ENA has the least, followed by IMIL, followed by some split between IMFL of your own brand, sorry, of USL and then your own brand. So if I was to take that, and as you move to, I'm given to understand that 7.5 million liters is just a academic thing. Actually, you'll be able to get out about 8.5 million liters of actual production is what your team had explained in the last call. So as we move to that, would it be fair to say that our margin profile should better because we would try and do a lot more of that enhanced capacity of higher margin products which are our own proprietary products? Is that a fair sort of intent?
Yeah, definitely.
Okay.
Hello?
So that's great. So that's what I wanted to understand. That so what you're saying is that as we enhance our capacity, so would we want to increase our margin profile by improving our mix index.
Yeah.
Okay, great. Thank you so much, Tushar, and all the very best for subsequent quarters. And as I said, you and your team are doing an excellent job. Thank you so much.
Thank you.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in this conference, we request you to limit your questions to 2 per participant only. If time permits, you can come back in the question queue for a follow-up question. The next question is on the line of Abhiruchi, an individual investor. Please go ahead.
Yeah, hi, Tushar. How are you?
Hi, I'm good.
Yeah, so my question is, I think I read that Diageo in India is thinking about their strategy of giving contract work to people like us. If that is true, what do you think the scenarios can play out, and how prepared are we?
See, Diageo is definitely looking at players like us to work for them. So post Diageo's takeover of USL, earlier when USL was there, so USL was proudly owner of, say, for example, 100 factories also. So now Diageo wants to concentrate in all that, and they want to concentrate on what is their USP. Their USP is creating brands and selling those. And they want players like us who has got USP in manufacturing, who's got expertise in manufacturing over the years. So we are a company which has got a 4-decade experience in manufacturing. Okay, so they are realizing on few players like us across the country. So they have identified a handful of players who are doing most of the jobs. This is one, to answer your question. Second is how we are able to encash it right now is that most of the things what we are doing with Diageo is for a long-term basis. So that can be jotted down from a basic simple example is that earlier when we were manufacturing for USL, we were just considered as a job work manufacturer. Okay, but now we are considered as a long-term partner. And there are a couple of other things also which we are doing for them, which are almost on the finalization stage. So so these are the unique things which they want to do with us, like which we cannot disclose at present, but we are definitely looking at a long-term and cashing our relationship with Diageo.
No, I understand that. And my question is, I think they have a new CEO in India, and
yes.
Post that change in management, I read a disclosure wherein they said that they are looking at change, they are looking at their current strategy, which is to concentrate only on premium products. So my question regarding that is, if they were to go back to their previous strategy of the USL, where they enter the mass segment again, suppose if that happens, then what is our strategy going ahead?
So see, if they enter in the mass segment, our strategy has always been the mass segment. What we are doing right now is we have got their own popular brands here, popular brands which they are managing in Madhya Pradesh. So when Diageo was selling 6 lakh cases of those popular brands. And post our takeover of their business, we have reached that, we have taken that volume within 3 years of running the business of 11 lakh cases. And why we took this opportunity is definitely with this opportunity, overnight we became the number 1 player in Madhya Pradesh, and we started selling our products with those products. So we are also looking at our products. In other states, we are entering with our products only. We are not entering with Diageo's products. So you have to have a product line and you have to have a consistent quality and acceptance. Then only the sales will come. So that's what we are targeting.
Understood. Appreciate that. Just last one question. If you can throw some color on the strategy that we have and the success or not so success that we've had in the UP market, given that we are in a COVID situation, how has been the progress till now?
The UP market is very nascent. Like last year's last quarter, we entered the UP market. In UP market, we entered as in other markets also. In UP market, we entered with the lower end of the brand, which is slightly lower than the popular range category. In that, what we did is primarily we did something different because when you have to enter in that kind of market and enter into somebody else's territory, it's difficult to break through. So what different we did is that generally in that category, people use only single label, that is front label only. Okay. So we introduced a front and a back label. Though the cost was only minusculely higher than a single label cost, but that gave an impression because in that category, it's impression that if there are double labels front and back, then that means it's slightly better product. So in that category where there was only single, we launched a 2-label product, so which gave us a good response. And after that, this year we've launched our premium whiskey. But because of COVID and all, we could not expand, we could not do the justification of the volumes. So the volume, substantial volume of a premium product has not come. But the acceptability of the lower end product which we had launched last year has come to a good extent.
Okay. Thanks, Tushar. Have a great day and take care during this time. Thanks. Appreciate it.
Thank you. The next question is from the line of Abhishek Maheshwari from Sky Ridge Wealth Management. Please go ahead.
Yeah. Hi. Thank you for the follow-up. So, sir, we discussed Kerala that, we are maintaining month-to-month sales and all. But how are the other states doing? Like Madhya Pradesh, Chhattisgarh, Delhi, even these states are your key states, right? And COVID situation is more or less normalized there, so.
Yeah. So other states like in Madhya Pradesh and Chhattisgarh, we are able to do good volumes post the lockdown. So as soon as the lockdown opened, there was a good amount of increase in sales. And as the vaccination drive is increasing, like Madhya Pradesh and especially like Indore, cities like metros like Indore and all, almost 80% population has been vaccinated at least 1 dose. And that's the impact, I think, why we are getting very less number of cases also. So almost things have normalized and business has come to a normal position. And we have seen an increase in the volumes. Only a setback is slight setback is there in Delhi because Delhi is going in for change in excise policy. And if the new policy comes, then we are hopeful that when the new policy comes, we will be able to increase our sales substantially.
Okay, so in other states, say Madhya Pradesh, Chhattisgarh, we are growing volumes. Right?
Yeah, we are doing better than last.
Okay, last year and month to month also, sir?
Yeah, month to month. Yeah.
Okay,
I'm talking about the post-lockdown, yeah.
Okay, yes, got it. Thank you.
Thank you. The next question is from the line of Keshav from Barak Sands Investors. Please go ahead.
Yeah, so thanks for the follow-up. Sir, I have a very basic question building upon a couple of questions few gentlemen asked earlier. So there was a mention about big players vacating the mid segment. Sir, I'm not very clear on this. So could you shed some light over what is happening? Are they vacating the market in terms of manufacturing the products, or are they vacating the space and focusing on premium brands altogether?
So primarily big player in the Indian market, two major players are there. One is Pernod and second now is Diageo. Okay, so these are the two major players, and they are concentrating only on their premium product range category where they have got better margin realization. So the popular range category is being vacated by these players. Or for example, like USL has given these popular range categories on a franchisee basis. So across India, I think we are one of the top franchisee performers for them. In other states, I don't know how come the other franchisee owners are not able to perform well. So that space is getting vacant, and we are trying to encash on that space.
Okay, so it's both in terms of contract manufacturing and also vacating the brand space.
Contract manufacturing space opportunity is there because they are moving away from their own manufacturing business, and they are relying on players like us for manufacturing of their products. So that is an opportunity for us.
No, sir. What I meant was that so this space they're focusing on premium brands. So is it like that earlier they used to produce the mid segment in house and now they are offloading with contract manufacturers, or there is also an element of completely vacating the space in terms of brands? That there is an
element of completely vacating the space for the brands.
Okay. So both.
So that's our opportunity there.
Okay. And sir, just one thing. In last call, you had mentioned about like we know that our capacities year ends would be 7.5 crore liters. So you said that that's the rated capacity, but we can do more than that. So what exactly would be our realizable capacity, if I may say?
Around 8.5. Sorry.
Okay, sir. Thanks a lot, sir. That's all. Thank you.
Thank you. Sorry.
Thank you. The next question is from the line of Dhruv Kashyap, an investor. Please go ahead.
Yeah, so just a follow-up to my earlier couple of questions. So just to understand this better in terms of geographical white spaces and product white spaces. So if we take geography first, we were a MP forward company where we probably still have a lion's share of our contribution coming from MP. Post that, I heard that we made a lot of success with some of our, for example, you gave the example always of a white spirit that you made for white brandy that you made for Kerala. So then you moved from there to the ticket. Now I'm trying to understand that are you going to the sort of bigger liquor consuming geographies next, or are they in sync with your product portfolio? I mean, how is it, or is it that you're going to 10 markets but spreading yourselves thin, or are you planning to go to one market first, capture it? I'm just trying to understand, for a smaller company, this strategic call will be quite important as to how do we geographically expand. So can you just shed some color on the thinking behind it?
Yeah, Dhruv, basically what we are doing is that we are taking one market at a time. So for this, we have appointed a senior person on our board who has served USL for almost 30 years, and he was taking care of the operations in different locations. So he is guiding us on which markets to enter. Plus, apart from that, see what has happened in last 1 year also, the pace at which we were planning to move ahead, we are also in the review of which pace we have to take. Because in certain markets that we were planning to enter, or say we were planning to aggressively go ahead, like for example Delhi and all, so there are a lot of private vendors also there. So in such kind of market, when the business uncertainty is there, when the market uncertainty is there because of COVID and all, so there are chances of bad debts also. So there also we are taking a quite cautious call, is just to increase the top line. We don't want to deteriorate our bottom line also. So that thing also we are looking into it. So when we enter a market, we look into volumes. Obviously, we look into volumes. Second is we look into realization. Third, we also look into is how much capital is involved in entering those states. Like certain states have got duties involved, wherein you have to pay upfront duty. So for a product of say 600 rupees, you have to pay a duty of 3,000 rupees. So your working capital also changes accordingly. And profitability and volume. So looking into all the aspects, we take a call in which markets to enter.
So just to understand this better with an example, Tushar, let's say Madhya Pradesh, Chhattisgarh is our largest market, followed by good success in Kerala. Now, what are the resources we are putting behind these two to expand, and then which is our market 3, 4, 5 that we want to capture?
So what we are doing in these markets is that we are obviously trying to increase the sale of our premium products. So like for example, on the brand which we had launched in Kerala, that Lemount White Brandy. So we are launching the versions of it now because it's majorly a brand market and it's a dark rum brandy market. So people are aware now Lemount's name and the quality which we are providing. So now with that we are riding our brandy products also, and we are concentrating on these markets to increase our premium brand sale. And apart from that, to expand into markets, what we are looking into, our next focus is UP, because UP is a good volume business. So if we are able to crack UP right, then we might have a good volume and there can be another Kerala created there. And then we are looking into Pondicherry and Odisha. So these are the markets which are there in the pipeline. But due to all this COVID and all, slightly the process got delayed for entire 1 year.
And in terms of my other question was on the product, white space. So I'm assuming that your product category has to be in sync with your market entry strategy. For example, like you mentioned that I know for a fact that Tamil Nadu and Kerala are very big brandy consuming markets, right? So in these places you need a product portfolio in line with the market requirements. So in terms of our product portfolio, have we got all the bases covered that a company of our size, scale and ambition needs, or do we have even product gaps, both in terms of product variant as well as in terms of price points?
See, in terms of product price points towards the lower end, if we see that, for example, if I give you an example of a market like Madhya Pradesh, so we have got a product at the lower end which is Bombay Special Whiskey. Then we've got James McGill Whiskey. Then we are doing Bagpiper Whiskey. Then we are doing our Central Province Whiskey. So every 5 rupees price point, 10 rupees price point up or down, I've got my products available till this category, till the lower end category. So similar is the kind in rum and in the kind in white spirit. So we are trying to capture the entire lower end, and we are trying to place our products in such a way that with a price point of 10 rupees up and down, so the customer either goes up the ladder or down the ladder, so our product should be available in those price points.
And also in white spirits, whether it's gins or vodkas and rums that you mentioned, do we have enough varianting and enough price points in these also? And do we have a gin?
No, we don't have a gin because see, gin per se, the market, gin is a totally different market altogether, and it's acted really differently. So in gin, the most popular gin was there in the Indian market was the Blue Ribbon gin, which is on the lower end. So the sale of the Blue Ribbon gin is going down, but the sale of premium gins are coming up substantially. So we are in process of launching a premium gin, which should happen in another 3 to 4 months.
And the other question I had asked was on the vodka and the rums. Do we have enough price points and variants covered in our product strategy?
No, we have only single vodka at present right now. So that's what we are concentrating on. So for example, there's only one product category, one price category across the country which attracts the maximum volume in vodka, which is up now Magic Moment category. So we've placed everywhere slightly lesser than the Magic Moment.
Okay.
So that is the only vodka which is mass selling. Otherwise vodka, if you go up the ladder, then either there is only imported spirits, and down the ladder we have White Mystic vodka, which is of USL we are selling.
Right. Thanks a lot, Tushar, so much.
Thank you.
Thank you. The next question is on the line of Yogesh Bansal from B Square. Please go ahead.
Yeah, my question is regarding your expansion strategy. like the last quarter in the investor call, you expressed that you are expanding it, you increasing it, you're doubling your capacity from the present one. Can you shed some light on where we are on that, and are we on track on hitting our capacity by March 2022?
It will take around March 22, around first quarter of next year, we should see it happening. So most of the orders are placed, work has started. We've got a target of at least one year from today.
So everything is on track. So once you have your capacity doubled, you have enough markets where you can supply the excess capacity.
Yeah.
Okay. So with that, we'll see a doubling down on your revenue, or in next maybe another next 1 year, we'll double the revenue, the top line.
Yeah.
Okay. Thank you.
Thank you. The next question is from the line of Ashok Cheda, an investor. Please go ahead. Ashok Cheda, your line is in the talk mode. Please go ahead. As there's no response from the current participant, we'll move on to the next. That is in the line of Abhiruchi, an individual investor. Please go ahead.
Yeah, hi. Tushar, one more question regarding product gaps. I think we are not into the beer market right now, right?
No.
So just wanted to understand from you what is your view of the beer market, and do we have any plans to say further down in the future?
No, the company's promoter have a company wherein they are selling beer.
Okay. So in the associated alcohol company, there is no plan to enter that kind of a market, right?
Yes, right now we don't have anything.
Yeah. Okay, that's all. Thanks a lot.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. The next question is from the line of Keshav for Raksan Investors. Please go ahead.
Yes, sir. Sir, you said in the last call that we are in talks to export ENA to Europe. I think a tie-up with Diageo, if I'm not wrong.
Yes.
Where are we on that?
We had already exported one consignment. So that was, as I told in my last con call also, so that was the big achievement for us, because that projected the quality of ENA what we are supplying. So for manufacturing of vodka in the European markets, they took the ENA from us. And as you're aware that there is a huge COVID situation in the European markets, it's still not under in control. So that only one consignment has gone. And we are continuously in talks with them, because their sales have also gone down substantially because of the COVID.
Okay, sir. So, sir, from a quality standpoint only, say somebody existing in the very same location as you, Madhya Pradesh, and they have the same vendor for equipment, and they also start manufacturing ENA, sourcing the same raw materials from somewhere around. So, sir, what is in your DNA and in the processes that
basically there is we give this entire credit to our technical team, which keeps on doing certain modifications. So basically there is one standard plant, and there is certain modifications we ask for the plant manufacturer to do in that plant to get the required quality which we want. And after the plant is delivered, also our technical team keeps on doing R&D on how to increase the quality of the ENA which is there. So it's not today only; it's over the years. Since last 3 decades, we've been known for the quality of ENA which we supply. So that is the reason why. That is the reason. For example, a company like vodka is just a pure ENA which is there. So it's just a moment of pride that earlier they were sourcing ENA from the European markets, and now they are calling ENA from the Indian market to manufacture their vodka. That speaks to the quality for us. So it's not about, I'm not talking about if somebody sets a plant in Madhya Pradesh also. I'm talking about the international also. We are able to match the quality of requirement with there. That's why they have taken this.
Okay. So, sir, that means that the contract manufacturing space going forward could also be a very good opportunity for you because the big players would want to go for.
It is still a big opportunity. So every time our volumes have been increasing in terms of contract manufacturing, and looking into that opportunity also with this new expansion plan, we are also coming up with a new bottling hall also.
Okay. All right. So just like one final thing. So it would be next to impossible for somebody, say, who already is doing this business but not as good as you, to make ENA which matches your quality, and therefore that's the barrier to entry, and that's where you excel, right? At least in the bulk sales.
See, it would not be right to say next to impossible because nothing is impossible. Somebody can do it, but over the years, nobody has been able to match the quality which I can see.
Okay. Thank you, sir. Thanks a lot.
Thank you. We'll move on to the next question. That is on the line of Ashok Cheda, an individual investor. Please go ahead. Ashok, your line is in the talk mode. Please go ahead. Ashok, your line is in the talk mode. Please go ahead. There seems to be no response from the current participant. Participants, if you wish to ask a question, you may please press star and 1. The next question is from the line of Sarang, an investor. Please go ahead. Sarang, your line is in the talk mode. Please go ahead.
Can you hear me?
Yes, sir. Please go ahead.
Hello. Yeah.
Hi, sir.
Hi. So I have a question about our proprietary brands. So in terms of geography, we primarily focus on MP and Kerala for proprietary brands. Is that correct?
No, we are concentrating on other markets also. So basically, MP and Kerala is our largest market. But we are doing in Chhattisgarh, we are doing in Delhi. Then recently we started with Uttar Pradesh also.
Okay. All right. Sounds good. Okay. Yeah, that was the only question I had. Yeah. Thank you.
Thank you.
Thank you. The next question is from the line of Abhiruchi, an investor. Please go ahead.
Hi, Tushar. I know that we have a expansion plan for the next 12 months, wherein the capacity will go up to 7.5 crores.
Yeah.
What do you think would be the plans going ahead? After 7.5 crores, what are the milestones that we need to hit to start thinking about going for further expansion? And how much expansion can we do in the current location? And what is the level of expansion wherein the economy of scale advantage negates, and then we have to look at other locations?
Himanshu, so our plan is that whatever expanded capacity which will come, we want to convert it into our value-added products. So the ultimate goal would be to convert 75 million liters per annum to our own value-added products. So that is our ultimate goal. So we have to right now focus on that only. And utilizing the capacity, if you talk about utilization of capacity in terms of sale of either ENA or ethanol, as per the opportunity in the market would be. So we are hoping that within few months of operations of a new capacity, we would be able to achieve our 100% capacity utilization. That's been our target. So that is the plan for next 5 years. Suppose that post that we will be able to expand in the similar premises only. But after that, we will have to take a call that whether we want to increase here only, or for example, if we are able to create a substantial volume in states like UP or in, say, for example, Kerala, so we can look into setting up a small plant there also. But setting up a plant at separate locations have got certain huge amount of restrictions. So looking into everything, we'll have to take a call at that point of time.
Understood. So if the ethanol story plays out as we expect it to play out, then the capacity utilization should happen within 6 months of commencement of the plan.
Yeah. If
Right?
that plays as planned, or if that does not play as per the plan, then in terms of sale of ENA also, we will be able to utilize the capacity within few months.
So if we are able to utilize the capacity within few months for ENA or ethanol, does it make sense for us to further increase the capacity from, say, 7.5 crores to 10 crore or 11 crore?
See, initially few years you would obviously require to stabilize yourself, because your stability is also important. It's not that you have achieved your 100%, so immediately you have to look in for expansion. So definitely we've got a thought process is that once this expansion plan comes into place, then we might look into increasing our license capacity. So we will try and increase our license capacity. So the entire process itself will take around 3 to 4 years. So our focus would be to increase the license capacity in the present premises only. So that's the focus. And apart from that, if we get an opportunity in any other states, and we see the opportunity is a value buy, so we will be happy to take that call at that point of time.
So is my understanding correct, wherein I say that first the milestone is to take the capacity utilization to 100%. Second milestone would be to increase the value addition of that capacity. And third, once these two are done, then we would look at further expansion. Is it right?
Yeah. So, but the process of expansion in the present location only, we will immediately start after our new plant capacity is utilized, because the process itself of getting an additional license capacity and all that, the process itself is a process of 2 to 3 years.
Have we started on that process?
No, not right now. After the expansion, we will start.
Okay. So we plan to start the process for the optionality that we can have right after the commencement of the plan.
Yeah.
Okay, understood. Thanks a lot, Siddharth.
Thank you.
Thank you. The next question is from the line of Abhishek Maheshwari from Skyridge Wealth Management. Please go ahead.
Hi. Yes, sir. So, sir, this quarter we operated at 60% utilization. So, on your full year basis, can we expect us to, touch at least 80%, 85%?
Yeah.
Easily, or, all depends on COVID and everything?
Definitely depends on COVID. COVID is something which nobody has a control of. But if things go well or things go as per normal, also there is no lockdown. Like with the 50 days lockdown also, we were able to achieve almost 60% of our capacity in the first quarter. So we were selling ENA to other states. We were selling IMFL products to other states. Though MP was locked down almost for 50 days.
So, yeah, 80-85% is doable then. Okay, sir. Thank you.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. As there are no further questions, I now hand the conference over to the management for the closing comments.
I would like to thank all of you for participating in the earnings call. I hope I've been able to answer all your questions satisfactorily. If you have any further questions or would like to know more about the company, please reach out to our investor relations manager, Valued and Dollard Capital. Thank you.
Thank you so much.
Bye.
Thank you. Ladies and gentlemen, on behalf of Dollard Capital Markets Private Limited, that concludes this conference call. We thank you for joining us, and you may now disconnect your lines. Thank you.